All right. Welcome to Economics T, Economics Explained in the Digital Age. This is episode 2. What is a meme and how exactly does it relate to stocks? With Walter Baumgartner, who is my dad. To start us off, Dad, you want to give us a brief introduction of yourself?
Yeah, I've been in the investment business for a long time, first in the venture capital side in the 80s, and then started a fund that's more a hedge fund in the 90s, all the way until just recently when we distributed the fund at the end of the year. And we mostly focused on high-tech stocks, mostly smaller cap.
Cool. All right. And basically the premise of today's episode is we're going to be covering some of the strange sort of booms in the economic market with regard to certain what we call meme stocks, which are like joke stocks, with the evolution of the internet and how that's playing into certain stocks and how it's affecting the market. And we just wanted to get your opinion on a few of the current events and talk a little bit about that.
Well, it's not unusual, sort of the late stages of a bull market. You have all kinds of new little aberrations in the market starting up. Like in the 90s, you had the eyeballs. It's like companies, we have more eyeballs, or we have so many eyeballs, and you get a valuation on it. This time around, you have both meme stocks, and you also have the new way of going public, sort of through famous guys just doing an offering and raising some money, and dozens of those offerings came out. So, and of course you had the regular IPOs and so on. So the meme stock thing, I don't know whether it is really that big a thing of the overall market, because even though there was some significant participation, I don't think the total amount of dollars, of course, it was very, very special for those stocks, like AMC and so on. And of course, for the guy to raise money for his company. So it's very helpful to him. But in terms of overall effect on the market, wasn't nearly as much as obviously all of the companies that went up, with bigger caps where, a lot of money has gone in. I mean, we just, recently experienced the Facebook thing, right, where $500 billion were lost just by, them having a bad quarter. That was one of the worst things. That's a lot of money going down. And so the meme stocks are significant, but and not as important to the overall market and functioning, even though they added a new element that people can go on a site and basically talk up a stock. And I mean, you've always had some of that, but not in a way. It used to be some coordinated fashion. Somebody later drives the stock, and sometimes people go after them because they think that's illegal. But here it was sort of people looked into it, the SEC looked into it, but it was just a whole bunch of people that got together and sort of talked online and informally, and it was hard to really go after somebody that did something wrong.
So you would say that would be the main motivation for why people kind of would invest in these stocks that otherwise kind of didn't have a lot of future value, like GameStop or AMC, which are kind of failing companies. So you would say it was kind of the collective like persuasion of like on these online sites like Reddit, or do you think people had their own kind of reasoning as well? Like, they wanted to revive these companies that they had during their childhood, or they wanted to kind of screw over these hedge funds, which had apparently shorted a bunch of these stocks?
Well, I think that was the original intention. I think there's some people that looked at short positions in certain stocks and looking at something that's not as huge a company, and you can say you can go after them. I don't know whether there were a lot of elements in there that people particularly liked those companies that from the past or from the experience. Of course, we all have gone to a video store, for example, right? To buy a game maybe or something. So there's some connection that people had to GameStop, and of course you go to the movie sometimes to an AMC theater and so on. But I think it was mostly because of they figured they could hurt the shorts, and of course they did. I mean, especially initially, until you can only do that once or twice, and then everybody wises up and sort of lowers the shorts in these companies. And they were not companies that were terrible in that they're really going out of business, but they were pretty marginal. And of course, time was not for them, like the movie companies, right? The AMC. I mean, it's terrible in the pandemic. Hardly anybody's going to the movies and so on. So they were really helped, I think, by be able to raise money and sort of stay in business much healthier. But I think then the thing just got us a little bit. It's sort of a group thing, you just people have a lot of fun, and of course the first guys say, look how much money we can make, and then it draws them in lots of other people, and people make money for a while, and then of course it becomes highly volatile, where a lot of people start to lose money and some make some money back. And I'm amazed that it's kept ongoing for so long, right? Because it obviously hasn't been as profitable more recently, but very volatile.
Do you see like a future with like people just investing in like these meme stocks, like searching online for where these bubbles might happen and like predicting which companies might be the next AMC or might be the next GameStop, that way to like make a profit? Or do you see it more as just like a more casual fun thing to just sort of put a few dollars in and see what happens?
Yeah, I think it's more the casual thing, and I think it was driven by a number of elements that came together, such as people having time, and sort of, it's sort of a home game, right? When you don't go to work and don't go to school, and or you have additional time at home, and so that's sort of, you need something to do, and that seems interesting in terms of just doing a video game and so on. You can actually play with money and maybe make some money, and as the function of the bull market, I think that as I said, I mean, things were a little crazy. Everybody says, hey, people making money out there left and right, and so you sort of get carried away with it. As the market overall has corrected now, and the whole trading mentality, I think, is abating itself, as well as people doing legitimate stocks if they're not working, very well. So it's a not as exciting a game as when you just have a bull market. So I think it's not to say that it can rehappen again, but it probably will fade away for a while, and or in a while, and then it maybe pops up in another version and so on. That captures the imagination of people.
Yeah. And so one of the things that facilitated this craze also was Robinhood, which was
Right.
kind of an easier way for like younger investors to kind of invest in stocks, basically. What are your thoughts on that?
Well, yeah, I think they did a clever thing by having an easier interface, really, and a game-like interface, and also, special of the day, and all of that, highlight a certain stock and whatever, and I mean, it's very easy actually to go to Schwab or to Ameritrade or anybody else to really start your own brokerage thing, and they have a pretty good interface too, but it's not as much fun. I mean, the other one was sort of the fun way to do it, and also was a community-based thing, sort of, and then you had a sense you're doing it together with a fun group, and that's the big difference. And of course, it worked until they sort of overloaded the thing on a couple of stocks, and the guys needed to raise money to, because there's this 3-day period, right, between time when you buy and when you actually have to settle it. and there was so much money involved suddenly that the broker didn't really have enough capital to carry that, and has to actually shut down a couple of times, which of course wasn't very popular among the group. But I think there are many more people. I mean, millions of people have come in the stock market maybe that haven't been before. Whether that will stay that way, whether people get into, just buying regular stocks and doing that, or whether a lot of them get hurt and stocks have started to go down and then say, Jesus, now I'm losing money. It's not really my game. I don't want to. I go back to a video game where maybe I just have to occasionally put a little money in to buy a special capability, but I don't have to lose my 10, 20,000, and then before I know it, it's back to 2,000 or whatever, and it's a tough game.
Yeah.
You want to ask the number 5, Ryan?
You got it.
All right. So, I mean, obviously Robinhood faced, as you said, Robinhood faced a lot of controversy for not having the funds to kind of cover all their trades. But was this something they could have feasibly prepared for? Was there kind of any actual way that they could have prepared and had enough funds at the ready, or was this kind of them just being the victim of an unfortunate circumstance?
Well, I think they're started as a small company and they grew very fast, and they did raise quite a bit of money. And so what they didn't foresee that there was just this enormous volume on, one or two stocks, especially, the one I think was a GameStop stock was an AMC, I guess, was a couple of stocks. And then the difference between they really have to carry it between, the day the trades are made to when you really have to get the money when the trade closes 3 days later. That's part of the problem for them. And so they needed to have capital that they could back it up to because they actually didn't do the trade itself, right? That was really, they had an external firm, which how they got compensated, right? Because they got a little piece of every trade. They got a little piece of that action. And so, I don't think it could have been prevented totally. And there was only a couple of days. Usually people were out, but and then they did raise additional money. I think they raised a couple additional $1 billion from their backers. So, I don't think it could have been avoided because it wasn't anything anybody expected. Now, if it would happen to Morgan Stanley, they wouldn't have had the problem because they have dramatically more assets, or even Schwab or Ameritrade suddenly.
Yeah, perfect. And then I guess sort of one last question to conclude it all. As more people have access to investing with newer apps like Robinhood and stuff like that, and the internet becomes more accessible to more people, do you see any new changes in the way that the stock market and investors interact? Or do you think that as we kind of adjust to the internet and to our new digital age, that things will kind of be more or less the same?
Well, I think the online trading, right, has been going on for some years, and I think the Schwabs of the world have done a pretty good job with their mobile apps, and a lot of them have opened out. Of course, some of the big established firms have been slow to come up with clever apps to make it easy, but all of that has changed. And of course, they in a way helped by showing that there's a receptive audience. So I think there'll be more of that. I think there'll be more trading. People try it out. The question is going to be, are you going to be a trader, or are you going to be an investor? If you're an investor, you're really more medium-term oriented. You're more laying down some bets and you see how they worked out over time. If you're a trader, you got to pay very close attention. It's actually time consuming, right? Of course, that's part of the fascination. It's like being in the game. Every day goes up dramatically or down, and you can go in and out and maybe make some money, lose some money. and it's like a game. But I think that you can tire of that very quickly if net you start to lose money. Obviously, while it's working for you in terms of making money, then it's fine. But trading has always been very difficult, that you can make money over time. And so, I think to just get people into the stock market any which way is a positive. But maybe a lot of people that got into it casually and had some fun with it said, I didn't really make any money. I spent a lot of time and just wasted a lot of my life and time, and I'm going to give up and get away from it. And that's what happened in the past, in year 2000, after the big bull market, and people just wanted to get out of the thing and said, get me away from that.
Yeah.
Cool. Is that good, Ryan? Is our time up?
I think so. Yeah. So that was episode 2 of Economics Tea, Economics Explained in the Digital Age. Thank you so much, Mr. Baumgartner, for your time. It was great having you on.
Yeah. Thanks,
Okay.
man.
Good. Take care.
See ya.